month has gone by. Revisiting Arista Networks, anet, and that is most likely on the New York Stock Exchange. Technology sector industry is communications and networking. And I think October 9th, I did a podcast on that, and I had it in early stage 4. I think the price action was right here below that breakdown line. October 9th, so maybe here, halfway through. Yeah, man, 1 candle, 2 candles. Price action went down, buyers came in. Next month, price action went all the way up. Buyers came all the way up, and sellers just destroyed it, brought back down, and you see that noise? So if you just look at the bodies, exclude the wicks, you see that it's not that volatile. That noise, this is potential whipsaws, potential entries. And you see the downtrend on the monthly is really clearly down. And what we're going to see this swing, this price action going up, most likely when we are on the weekly. That's probably going to be a pullback close to some overhead resistance, close to, see, it pulled back through monthly defined support and resistance, pierced, sunk through, only to have that price action go back down below it, guys. So what's happening? Every time tick-tock, price action, you see the 12-month moving average starting to even angle downwards, and that's the beginning of the pressure, just pushing it down. When you're below it, you don't want to be necessarily shorting it, but when it starts angling downwards, most likely when we're going to zoom in on the weekly, we're going to see a stage 4 breakdown. And we're going to just check the weight of evidence to make sure we're out of the Ichimoku cloud, that we're below weekly defined breakdown line. But right now we are below the monthly defined breakdown line. I have a measure move. Oh, what did I do with my arrow? Arrow, please. And here's my target all the way down to 200, 201. Almost there. All right, zoom in on the weekly. Ooh, so October 9th. October 1st. Okay, that's the week of October 1st, so probably halfway through this candle right here. And I had it early stage 4. I probably said can't short it because you're not out of the Ichimoku cloud yet. And I was right. Look at that. I think I even did my regular scribbles that I've seen too often. Price action hit the support, the bottom area of the Ichimoku cloud, only to go back up, test previous support, turn resistance, test. Right here would have been a great risk-reward entry. Except that we still would not play it because you're still in the cloud, and there's still chances of that cloud bring that action back up. And then after that, once you have a close below it, then you're in a vacuum territory. Timber. So nice pullback. Love it. You see the pullbacks finished when on indicators, especially on the Mansfield, you see it. When the price actions go down, you're underperforming the SPX. When it goes back, starts pulling back up, you're starting to catch up, underperforming less and less. And after that, when the price action resumes its downtrend, you're continuing your underperforming the SPX. That is just awesome for stage 4. Right there, going down. Again, the damage. Where's the damage? This candle here. That's the damage. You've seen it previously. Damage. Sometimes you need more than one sword strike. That first one hit hard. You need that time. You barely, did you ever overcome that high? I barely did right here. Took a lot of weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. A lot of weeks. And it's like the first, let's say you're super healthy. Sword strike. But you're still healthy. You're still above the 30 moving average. You're still going upwards, still above Ichimoku cloud. All that weight of evidence, you're still up. It just hurts. Consolidate. And if you happen to have another one, but when you're already in less bullish territory and less trend, the stage is winding down, The trend is not as powerful anymore. You've been trading close to the 30-moving average. That next short strike is like strike 2. Hi-ya! Big slice, gap down, and after that, really hard to recuperate, guys. These are damage, just like these beautiful green candles on the breakouts. Here, you see above a horizontal breakout line, above the 30-moving average. You weight of evidence, everything's in its favor to continue. All these ones are telling you, I'm going in stage 3. I'm going to stage 4. And after that, this is the last battle. This is bring your soldiers to the field. And this is the final, how do we close the show? Let's get out of that Ichimoku cloud. Let's make sure the 30-moving average is going downwards. You see the red highlight. Let's have the price action below 30-moving average. Man, I just have a feeling I'm repeating myself, but I guess it's a good sign. Got to keep it simple. Redo the same rules. Crystallize them. Pull back. Are we out of the cloud? Almost. So right now, if we have a close below 219, that's a weekly defined. We'll be out of the cloud. We're already below the Ichimoku cloud here. The monthly defined breakdown line. So that for me is the last line. One crazy close below 218 be awesome. And what could happen is if you close below, you're kind of far from the 30-moving average, and you might want a retest here, that breakdown line, and then go down to let the 30-moving average catch up just a little bit. But again, on fear, that might hit hard once it breaks down. And you might go towards that monthly defined target, might bounce off that monthly defined target, and then back up here. But stage 4, guys, for anet, we're a few days away. Let's see where that close ends up, guys. Look at that. Again, I could have fun. Let's flip the chart. Am I biased? Oh. There we go. Wow, is that a stage 2 breakout? Look at that. Green volume, embryonic breakout. Oh, another one here. Horizontal breakout line. Pulling back, not out of the cloud yet. Man, I'm telling you, inverse chart, pretty cool stuff, guys. Would you play this as a stage 2 breakout? Not bad, right? Alright, guys, that's it for me. Subscribe if you like this. Thanks for watching.